Hello everybody and welcome to the midweek market update from Smack the Markets for the 18th of September. So today is Fed Day. We've got a fair amount of news due out today in any case, a little bit more than what we've been used to of late anyway, but the main event being the Fed interest rate announcements, which is due at 7 o'clock this evening UK time. Now, it's already been widely expected that the Fed is going to reduce interest rates by 25 basis points. But even so, even that's widely expected, it's probably priced into the markets already. These events can create quite a bit of volatility in the market. And I wouldn't be at all surprised if we see a fair bit of muted price action today in many markets in the run-up to this announcement. So let's take a look at a few markets here that we discussed on Monday, how they're faring out, and the sort of opportunities that we're looking at going into the second half of the week. So taking a look at the Dow here, from the start of the week, we were looking for the market to remain sort of bullish above 27,000 and to come up and test this sort of level up here around sort of 27,235, 250 area. At the moment, the market has found support here at 27,000. We've had some very shallow trading days, as you can see here on the daily time frame here. Very shallow trading days this week, and the market still hasn't sort of rallied up, but it has been holding that 27,000 level. So if we take a look at this on the 4-hour time frame, you can see our 27,000 level. You can see our level here at 2780, which the market's really kind of been hugging around, and our sort of target level up here around 27 sort of 235 or 250, which is the sort of round number. Getting up to this area, it closes the gap that the market put in over the weekend. And from a technical perspective, we're still sort of favoring sort of any bullish action. We're favoring this gap to close. Now, I think particularly once the market sort of breaks these sort of recent highs here that it put in this week. Now, of course, anything can happen with the Fed announcement later on today, but all things being equal, and as long as 27 holds, we're still remaining bullish on the US indexes. Now, the commodity that we discussed on Monday here was silver. And if you recall, what we were looking for here on silver was for this level to get broken. If this got taken out on the weak side, we were looking for 1750 to be retested. You can see so far, again with silver, very muted price action this week so far, and we haven't had an awful lot of movement at all. But if we just take a look at this on the weekly chart, we can get a bit more perspective of the reasons as to what we're looking at here. So we've got the structure levels here on the weekly chart at $18, $17.50 and $1700. So when the market sort of retraced, $18 didn't hold. We got a pull down to 1750, which did hold. This week so far, we've had a retest up here to 1800, and what we're looking at here is if we can get a break of that 4-hour level, we're looking for a retest down here to 1750 in the near term. So few reasons why we still like this. One is that we've got a support level. We're in not the prettiest of downtrends, but broadly an intraday downtrend here. We've also got an open gap here in the market as well, and a break of this level at 1780 kind of puts this into a sort of position to sort of come down and retest those lows, retest that level, and closes that gap as well. So our bias at the moment is for short opportunities underneath 1780, and so far we're just sort of holding to see if the market breaks that level, in which case we've got a fairly sort of decent sized trading window to look for opportunities there. Now, when we come to the Forex markets, on Monday, we were looking at Aussie dollar, and we're looking at Aussie dollar here. If the market broke the highs, we were looking for breakouts, breaches above these highs and moves up to 69 and then up to the $70 level or 70 level. What happened was the market didn't manage to break these highs. It's actually rolled over now, and the sort of structure is now looking very weak compared to being bullish. So the trigger here for us to be changing to more of a bearish stance is here on the weekly, and you can see that if the market sort of takes out this sort of level here, which is around 68,250, you can see that's been previous support. Once that's sort of taken out, this is going to start to look incredibly interesting for a continuation of this weekly trend, and possibly looking for moves down to these old lows and retesting of these old lows. So we're just poised at the moment to wait for the support level there to be broken, and then we're going to be looking for more short opportunities here on Aussie dollar. Now, another forex market that we're looking at this week here and going into the second half of this week is Kiwi yen. Again, if we come up to the weekly chart, you can see on the weekly that we've got a short trend in place here. The moves, the retracement moves can be sort of like fairly steep, as we've sort of seen in recent times, back up here to retest 72.50. We've got another retracement back here as well, back into the moving average sort of area here. Last week's candle was looking quite bearish. We had that exhaustion style candle, and now this week again looking like a, well, at the moment we're halfway through the week, we've got a doji formed, but a very narrow range on the candle, and we've broken the low of the previous week as well. So coming down to the lower time frames, and if we take a look at this here on the 4 hour, if I just zoom out of this, you can see that the market's rolled over here. We've started to put in the structure of a short trend here. Moving averages just turning now into the right order. We've got convergence on our indicators, and we've got this level through here that where the market sort of found previous resistance, now sort of finding support through here as well. So our sort of trigger really is to wait until after this level is broken. That puts us into a bit of a trading window down to this 68 level here. So that's plenty of distance there that we'll start to look for short opportunities down towards that sort of 68 level to participate within that sort of trading window. So we're still looking for, or looking at sort of short opportunities now on Kiwi yen once this sort of level has now been sort of taken out. So there's a few opportunities there, a few markets that we're keeping a close eye on in the trading room this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.